Good morning, traders. Richard here doing a quick Ichimoku Cloud chart market review of the NASDAQ 100 index. We'll start with the monthly Ichimoku just to highlight some of the key support zones. Now the bears are ripping the guts out of this conspicuous consumption bubble. The market's been in a bubble for quite some time now. We can see a tremendous rally up, and we're very far extended from the top end of the cloud. And there was two beautiful sell signals here above the 16,000 level. And the index is down more than about 29-30% almost since then. Now, the front end of the cloud here, this 11,327, the market did manage to rebound from that level. That's very close to these lows here of 2020, third and fourth quarter lows. But we're not out the woods yet. There's still some significant downside, but at least we should expect some form of a relief rally back up to the front end of the cloud's top end resistance zone here, 13,327. So these are the two levels to watch out for. 11,327 is a major support zone on the monthly Ichimoku, and then 13,327 is now the new resistance zone based on the Ichimoku Cloud, on the monthly Ichimoku Cloud. But still not out the woods yet, but at least we've got some form of a rebound from key support levels. There's still some downside risk to these highs here, this 9,500 zone, as well as this cloud chart support zone there at 9,415, and then that high there of 9,736. So that's the downside risk on the monthly Ichimoku. Now turning to the weekly Ichimoku Cloud, you can see there's MACD sell signals up there right at the top there above 16,300. There was various cloud chart sell signals on top of the cloud, and then there was a few more sell signals when the index sliced through the bottom end of the cloud here and entered bear market territory. Now, price action below the cloud is a confirmed bear market, and there are short-term swing trade opportunities, but the long-term sell signal was here at 16,300, and long-term investors should remain on the sidelines for the time being. But there are some various short-term swing trade opportunities from these key support levels. Now, this cloud chart support level of 11,071 coincides well with these lows here of the Q4 of 2020, and that's a support zone. We can see the NASDAQ did manage to rebound from that level, and now it's navigating the standard line of the turning line of the cloud here as a key resistance zone, 12,296. And then if that resistance is if we broke past that resistance, then the bottom end of the front end of the cloud, 13,036, is the next key resistance zone, as well as this 13,327 upside resistance zone, and that coincides well with the monthly Ichimoku Cloud chart resistance. So these are the trading opportunities, swing trades from these support levels back up to the bottom end of the cloud. But do remember, for a long-term bullish signal to be there, we need to be back above this yellow area, back above the top end of the cloud. So the market's still risky. There's downside risk to these cloud chart levels here at the bottom end of the cloud here, to 10,348 of 10,350, and then the ultimate major support zone on the cloud chart level is this zone here at 9,606 is the other major support zone to the downside. So if the bear market rally continues and we just grind lower to these levels, there's downside risk towards these 10,300 and 9,600 cloud chart levels, and that 9,606 corresponds well with Q1 of 2020's high, which is another support zone. So there's downside risk if support fails to hold at this 11,071. Then that would mean we might be sitting 10,348 as the next key support zone, and after that it's 9,606 and 9,415. So, but that's only if support fails to hold at these levels. Turning to the daily Ichimoku Cloud. So, bear market territory ever since the 15,600 sell signal there as it sliced to the bottom of the cloud, failed to rebound, failed to find support back up there, and then it was just the taps opened, briefly dipped above the cloud there, but we also had resistance to deal with, this top end cloud chart resistance zone. So to the downside, when we're in bearish territory, it's a confirmed bear market because price action is below the cloud. We really need to be back above the top end of the cloud here to be bullish, so still bearish with short-term swing trade opportunities from these support rebounds, technically just mean reversion type trades back up to the bottom end of the cloud chart resistance. So you can see here, did manage to find support at the 11,071 zone, then rallied into the turning line and standard line of the cloud, standard line in the cloud, the purple line there is a bit of resistance now. Back below the front end cloud chart, so that support of 11,787 hasn't held, but will be interesting to see if we're going to get a rebound from this turning line as well as this 11,787. So it will be interesting to see if support comes back into these areas here, then we might retest the bottom end of the cloud here, that resistance zone over there. Let me just put that line in there. There we go, 12,460, as well as the top end of the front end of the cloud resistance. So these are the two short-term upside resistance targets if support manages to come in at this turning line, as well as this front end cloud chart 11,787. These are the ranges. So these are the support levels to watch out for. Swing trade back up to the bottom end of the cloud there if support holds at this turning line of the Ichimoku Cloud. But really, in theory, we really need to be back above this top end cloud chart to be ultra bullish on the market. But so far, fantastic short selling opportunities in this conspicuous consumption correction. The market's been fluffy for a very long time, and there's still some excess liquidity in the system. If we look at the 4-hour chart, beautiful sell signal back up here at 14,141. Rebounded there after hitting the support at 11,783, back up to the bottom in the cloud, ran into resistance in the cloud, and then just sold off again to retest this 11,071, which we now know is a major cloud chart rebound zone. But so far that trade worked out well. Now it's getting closer to the front end cloud chart resistance zone. Will be interesting to see if we're going to get a rebound from this front cloud support level, 11,643. So if we get a rebound from these levels today and we can manage to cross the cloud chart, that will change the outlook on the 4-hour from bearish to bullish, as long as we can get back above the top end of the cloud, and then it's time to go ultra bullish on these rallies back above the top end of the cloud. Resistance levels on the 4-hour I want to watch out for. It's this level here, 12,530 roughly, and 12,663, and then to the upside. Once we cross the cloud there, these are the upside resistance targets to keep in mind when you're trading to the upside on that side. But so far, these are the upside resistance targets, as well as this front cloud resistance zone. That's 11,971, so to speak. That it needs to break past that level, and then the outlook will change from bearish to bullish as long as price action is back above the top end of the cloud. Looking at the hourly one, back above the top end of the cloud, which is good. Last week we highlighted these moves. This breakout past the cloud is very encouraging, and we expected it to retest these levels. Now, levels to watch out for on the hourly one, for support to come in at this level of 11,607, and then if that support does not hold, we've got this level down here, 11,540, to test for a rebound, and ultimately this bottom end cloud level there, 11,396. So the downside risk target is 11,607, 11,540, and 11,396. These are all kind of areas where you can swing trade back up to the top end of the cloud resistance. So these are swing trade areas if support holds on these hourly Ichimoku Cloud. Now those levels, if we go back to the 4-hour, we can see they fit in nicely just below the front end cloud chart level. So if we get a rebound from these levels, that will be great, because we still have this 11,071 zone, which says we can possibly swing trade these back up to the top end cloud chart resistance if support holds at these levels, and we get these levels from the hourly Ichimoku Cloud. So in summary, bullish on the hourly, price actions above the cloud with these target support levels for a potential rebound. 4-hour Ichimoku Cloud still bearish. We really need to be back above the top in the cloud to really take comfort in a relief rally. The daily Ichimoku still bearish, because we've got a long way to go before we're going to be bullish on this one. We've got major resistance zones on the daily to get through, and then obviously the weekly Ichimoku's got a lot of work to be done before this one will turn bullish. But there are some short-term swing trade opportunities, but do remember we are trading any buys as counter trend. Lots of short selling opportunities when the resistance levels are hit, but do remember we are still trading a very extended market from an Ichimoku Cloud chart perspective. Until next time, happy cloud chart trading. Bye for now.